the fact that China are getting back to work on, from a lower level, from a pretty low level, is maybe why people are being a bit more cautious about it, because 50 doesn't really tell us too much, and it's not like we're expanding per se. It just looks like it's not as bad there right now, but it's still a
But
little bit
not
in
as
the
bad. It's
hole.
got to be reasonable, I would have thought.
Yeah, me too. I mean, I suppose the only other thing is that it's possible that with China kind of going back to work, all that's telling us is that they're making more, and what we really need to hear is about the demand side, and we need to hear about the American side, and the buyers effectively. Are the buyers coming back as well? Because the numbers out of America a few weeks ago about the employment numbers were pretty dire. So I guess we're going to need a bit of a mixture of everything to pick up before we can start getting bullish on things again.
Yeah, are you across this, for want of a better word, what the Fed's introduced? Pay for American products with no US dollars. I can't quite put that into words.
Yeah, so I'm with you, and I need to dig a bit deeper on that as well.
Yeah, that's
There's
kind of
just
weird.
Yeah, and I have to say, there's so many measures coming out at the minute. It's actually quite tricky to stay on top of it all. But yeah, you're absolutely right. It is kind of weird because what that doesn't do is supply the world with more dollars.
Yeah.
But it kind of does at the same time. It's a strange, it's a really strange action, and you'd think that would weaken the dollar on the headline in some respects, but the fact that the dollar is strengthening off the back of it maybe tells us that that's not what it initially seems. I don't know. I found that one quite difficult, when I heard that. But then again, maybe what this is going to do is just give us a buying opportunity in some of the other currencies against the dollar, and the Aussie would be, I guess, a front runner.
Yeah, I'm looking at it very, very closely. And if we get to the weekly pivot, as I said, I think yesterday or the day before, I'm seriously considering a limit entry order here, but it's kind of not my style.
Yeah.
I'll see if it gets there, and I'll make a decision on what I'll do, I think.
Yeah. Yeah.
It
I
looks
get
like I'm
that.
going to be awake when it happens, so that's all good.
Yeah.
We've got 1 minute before open. Anything urgent from you?
Yeah, let's have
I'm
a quick
assuming you
look.
got short because
Yeah, I
the
flipped
market's set
positions.
up that way.
Yeah, so I did really what I said I was going to do yesterday, which was hold for as long as the market was open, and then close up. But I ended up closing up and flipping positions as the month started, and that was I can't find my Zoom at the minute. Where are you?
Zoom.
Can't find Zoom. Let me shut down my windows and see if. All right, market's about to open up. I am short, but there's no nobody's going to miss out on opportunity
All
just
right,
yet.
we'll set up the pound trade then, shall we?
Do you know, I haven't got an icon. I haven't got an icon for Zoom. Oh, hold on, that's why.
Yeah, sounds like me. Righto, let's set this pound trade, shall we? We're going short, 10 pips under the low of the range of the last 3 1-hour bars before London session. That will get us short at 1.2320.
Hold on 1 second, mate. I might need to do this just to kind of get me in, and then I will stop sharing just so it's back to you again. Oh no, well, it's just giving me that again. I'm currently not watching. Okay, don't worry. I'll work out what's going on here in a minute.
Okay. And our stop loss will be 15 pips above the high of the range of the last 3 1-hour bars, which will be 15 pips above the high of that bar, which will be 1.2408. 1.2408, and it is a sell. Okie dokie. Remember those numbers: 2320, 2408. 2320, 2408. We'll place the long order. at 24.08. That is 124.08, of course. And our stop loss will be 123.20. There we go. All right. Another loser yesterday. We're having a little bit of a losing run on this beta strategy at the moment. Those of you who are in for the first time, what we're seeking to do is trade the breakout of the last 3 bars prior to London session. So whether that be up, whether that be down, we don't care as long as it happens and continues to go in our direction, of course. The trick here is to only take one into the market, of course. So if we get triggered short, we would cancel the long. If we got triggered long, we would cancel the short. And once we get triggered, we trail on a 15-minute chart, and I'll take you through that if we get triggered or explain it a little bit better. If we do not get triggered in this session, that may be the case. It may not. It's the first day of the month. Pinch and a punch to everybody who got caught in as an April Fool. I don't think I did, but I might find out tomorrow. I don't know. So it is the 1st of April. I would tend to think that the market might be a little bit buoyant today. So I think we might see a little bit of movement, whether it's in this session or as we get into the US session, who knows? And speaking of the US session, we will be making an announcement towards the end of the show as to a little bit clearer on what we proposed yesterday. That is a second session of the day that Ash and I will do, which will be the opening of the US session. Okay, so analysis on the pound from me before we go anywhere. And I'm sure Ash will have an opinion as well. Very, very interesting scenario that we've got here. I don't know if that's a 61.8 or not. It must be getting close, I suppose. And I never use Fibos, guys, but when I see it clearly, I think, oh, I better have a look at that. It's very close. So one would be forgiven for thinking that there'll be sellers around for the pound. I don't know. I'm just not sure, I've got to say. This US dollar situation has got me completely confounded. And the news that we were just talking about, I think we were on air at the time, suggested to me that there will be confusion among traders, especially retail traders, because I don't understand it. I've got to be absolutely frank. That doesn't surprise me because I'm not a fundamentalist, nor am I an economist. So what they're proposing is pretty much double Dutch to me, and therefore I think I'd rather stay away from the pound crosses, from the dollar crosses, until that does become clear to me. Pretty much trading blindly if I were to do that. That said, as always, if I see a classic setup, I would have to take it, but I would take it at reduced risk. And we'll go through those in the not too distant future. Because I don't trade the first 30-minute candle of UK session, I will, as always, defer to Ash, who generally does find a trade early in the session. And as he has explained, he's already in the short on the FTSE. Let's take a look. Ash?
Yes, let's have a look. As Jeff says, I have got a short on the FTSE, and there's still an opportunity to join me. I've let's run through it. Really, it's a tricky thought. I've just opened up my some of my shares, and one I've kind of got a bit of a combination of long and shorts of my shares. I've taken a short in a casino company, and I took a long in an online supermarket company. The long has been stopped out, so that's actually moving further to the downside. So that was more of a defensive play. So that one surprised me a little bit. Also, my gold stock that I took last week, I've just closed that one up, and I got a healthy profit out of it. But I closed it up because that also looks like it's under pressure at these levels, which is kind of strange. Obviously, the casino company that I've taken a short in is doing okay at the minute. That is moving to the downside. And we see the FTSE has now broken through. Now, really, I want to look at this on a longer term time frame. So let's look at this on a 4-hour chart, because is the 4-hour chart structure that has now broken down. We need to see this weekly pivot taken out. We need to see that the price get below that point before we can be really comfortable that that we're coming back to the lows and potentially beyond. And when we look at this, if I look at the actual, if we forget the trend line, because the trend lines are to a greater and lesser degree, they can be a bit subjective. But when we look at this trend line, the trend line hasn't really expressed a break of structure on the 4-hour in some respects, because really we've still got the weekly pivot area and this low here as a price point that that if that holds up, then it's still kind of in place. So let's see what we've got pattern wise, and what we have. Actually, let's get this on a clean chart. We can see where the pivots are. There's a pivot up here. That's the sell zone. So if anybody's interested in looking for the selling opportunity, if you draw yourself a trend line on your chart, the selling opportunity is going to be up here, and it's going to be near that that daily pivot. So anything between the daily pivot and the trend line is a price to sell at. Anything that starts to get above that, then we've got to be a bit more cautious of, and we've got to be also careful that that we don't just get a scenario where price does get back up again, come down, and then start going higher. The question of why that would happen is really first and foremost and front and center right now. So I'm not going to concern myself with the upside just yet. Now, we were talking yesterday about playing the upside with those Chinese numbers, and again, the Chinese numbers have come out and they've been pretty good. So why would the market really start to move to the downside here? And the answer to that is it doesn't necessarily at this stage have a clear catalyst, except for the overall picture of the corona situation. So we might well be waiting. You know what Jeff just said about the fact that the market looks a bit like it might just bob around for some of the session today. I've got some sympathy with that point of view, because I wonder whether we do bob around until we get the big numbers from the States later on. That doesn't mean if it comes up here we don't try and short it. Of course we do. You know, we're going to try and get into the downside again if it comes up to that point. If it comes down to there, however, you will want to break before those numbers are released. You won't just want to trade. Even if price dips a little bit below, I wouldn't encourage that you trade that until those numbers are released, because anything could happen at that point. And the likelihood is, until those numbers are released, we are probably going to be caged within the boundary of this area here, somewhere between this point and this point. We're probably likely to be caged, so we might be getting a bit of ranging for some of the day. So every time it's in the upper range, we sell. Every time it's in the lower range, you can take a little bit of profit off the table and see if it comes back up again, leaving this where it is. I wouldn't buy down here by any stretch, but it's likely to be a bit rangy in between these two levels today. So we're looking for selling signals at the higher end and just taking a bit of profit off the table. What percentage of profit we take is questionable. I wouldn't take too much off. I wouldn't take too much profit down there, because we're really looking for this to continue lower. But when it comes down to the pattern here, we are starting to form something. Let's get rid of that. We're starting to form what looks like a descending triangle here. So that's what it's starting to look like here. Not interested in, the reason that this is not a symmetrical triangle is because you're taking the lower, this line is time-wise a lot further along in the picture than this lower line. So let's just remove it now, just to get rid of some confusion. And actually, let's look at this on a clean chart, so it's even cleaner and less confusing. So the pattern I'm looking at is this. with this kind of price point here as the neckline. Now you'll see when you look at your charts that does run quite nicely in conjunction with that weekly pivot. So it's got to take out that weekly pivot to confirm that we're moving lower, and that's when the loading will happen. And it depends when that does happen. If the numbers have been released from the States and we start approaching this area from above, then we can just enter at the low. But if the number has not been released yet, then we're going to wait. We're going to have to wait. If it breaks down, we have to wait for almost like a retest and see if we can get in after the numbers. So we're not going to do anything until those numbers are going to be released, because it's speculation. It's very speculative until that knowledge is known. So speculation does usually provide ranges, and the range will probably be between the upper level and the lower level of this descending triangle. Now, this measured move I've taken from the higher end of the triangle to the base of the triangle, and that would give me a price point to aim for, and that does lead us right back to the lows. Now, at that point is the point that the higher percentage of profit will be taken, and then if it crashes through, then you just want to enjoy the run from there on in and start using your stop loss management to continue. But you look at this on a longer term time frame, it's pretty clear. You know, if that breaks to the downside, that's where we're going. Now, obviously, conversely, if it breaks to the upside, then it looks to me that this is the target here. Somewhere around there. Somewhere around about the 6,000, 6,100 level. So that could happen too. And as you see with this pattern, it's not particularly bullish, it's not particularly bearish. It looks like we're just starting to crash into these upper and lower levels. I have taken the trade short. But I've got him pretty light, and I won't be married to it. You know, if things turn around and it looks like it's going higher, then I will trade it in that direction. And it's really going to be driven by some of the numbers and some of the news that continues to be released. So I'm gonna be slightly on hold, mate. But for right now, we are looking for the shorts. And if anybody gets the opportunity to get into this, then I would certainly be on the side of being a bear. As we open up the month right now, and it's just a case of waiting for where's my pivots? Just a case of waiting for our levels to be hit. So we're probably looking possibly, yeah. Well, as we said, it's the daily pivot that you're looking for a short, anywhere along that point there, anywhere along this lower point here. So that's the plan for the day right now, mate. Just waiting for that trend line to be reseen.
Right, mate. A few questions crossed my mind whilst I was watering the plants this afternoon. And one of them was, and I know you've been trying to position yourself for this with single stocks. Where do we think the action will lie once we go into recovery? Where do we think the smart money will be? Will it be in financial institutions? Will it be in property? Will it be in commodities? What are your thoughts?
Well, I think that's quite a poignant question.
It's not a bad one, is it?
Yeah. Well, I suppose it would depend on.
And if you get a chance, could you send me the YouTube link to me, please?
Oh yeah, no problem. I think it's gonna depend on where the no, I've got all my pages in the wrong place here. Let me do this. I will give you the YouTube link now. I've got to get on there myself. I'm just going to throw you the screen while I get my pages in line, because
happy days.
I've got
while you're doing that, I'll just pass a little comment on US dollar, Canadian dollar, which I've got on my screen. I think we can do that. Yes, we can.
Let's move that over there.
Bob the Builder. So this is the quandary that befronts me day in, day out at the moment. I get a setup almost perfect, and this would be one of those. We've hit the bottom of the descending channel. We've come back to the broken trade line. I call these trade lines, not trend lines, because they're not trend lines. and we re-enter the buy area above that trend line / trade line, and then we get a bar like this. How am I supposed to trade that? That's just junk. And if take the tails off it, I'm long above that bar, but it's got big tails, so it just makes it incredibly difficult to judge whether it's worthy of buying or selling. Either way, but I'm a buyer here if this tail isn't on here. Why? Well, because we've come off the bottom of the channel, we're headed towards the top of the channel, and we've just had a false break of support. That's why. And this candle just throws me completely off kilter. I can't trade that in those circumstances. Although I still believe we'll go there, I don't have the opportunity to play that anymore because that's taken that away from me. And that's the frustration of a very volatile market when you're trying to trade intraday, of course. So be it. It won't always be the case. And when we do get the opportunities, obviously, we will take them. But right now, bugger damn shit pop cack. Can't trade it. Simple as that. Sorry, mate. How are you going with all that? You all good? I think we might have lost Ash or lost me. I'm not sure which one's the case.
No, sorry, it was you lost me a minute.
Okay.
Yeah. So just back to your question about where would we probably see the recovery first. I think it's going to be an interesting question, and I think what I'm looking at.
I guess we should preface this by saying I am definitely not saying the crisis is over or anywhere near it.
Well, do you know what? I was just looking. There was one stock, and I wish I could. I wish I could take credit on entering this one. But one stock that I picked for some downside was HSBC, which is one of the banking stocks, and it's down. From where I picked my entry, it's down 17%. Now I didn't get in. So it's and I like to be open about these kind of things, because otherwise, we have no credibility when we actually do get a trade which is genuine. So it's all well and good picking a stock but not getting in. And the reason I didn't get into HSBC is that I couldn't at the time see the reason why that would be weaker than some of the others that I was trading in the direction. And it just so happened that I was very wrong on that. Now I want to show you this screen. Now I don't get too caught up in this because I know people can't trade stocks necessarily on this, but I do want to show you the chart with this one.
Go.
Because let's have a look here. Let's have a look on this, because now the reason I bring this up is that if we think about the okay, if you could pass me the screen, mate.
Oh, okay. I need to do that. Done.
If we think about which one is it? It's this is the chart here. Now this was my pick up here. I was looking at the short here. There was a slight issue with it being at the end of the day, and I've only really just flipped a share, so I'm still experiencing the best times to get in. But you get into this at the end of the day and look at it today. Not only is it low, but it's gapped lower and beyond this lower price point down here. Now, this is only a 60-minute chart, but you look at this on a 4-hour, well and truly broken structure. Look at this on a daily, well and truly a broken structure. I mean, I'm sorry, it's a bit messy, but this is my analytical charts. So we're looking at getting down to these lows. Now, you have to wonder whether a company like HSBC, one of the banks like HSBC, is going to go to zero. Now, we had the big discussion about oil going to zero within the company recently. Mm-hmm. And I think the same argument would be made for a company like this, the financials and the banks. The same thing happened during the 2008 crisis. The banks just got absolutely obliterated as more and more money was getting taken out of those financial institutes, and obviously we had the banking crisis, and maybe that's what people are predicting is going to happen. But the banks were in the end incredibly good value. So if we do get a recovery, something of a recovery, then the banks would have to be a place that I'd want to put my money. If nothing else, because of the price point. you could go down to quite a lot of banks. Now, I like HSBC anyway. I think it's a really good stock to trade. But this is the 2008 crisis, pretty messy. But we gather it is, it does kind of go in these ranges. But we're at the lower end of this range. It's a monthly chart now, and we're at the lower end of the range. Maybe it could come down a little bit further. In fact, it could even come down half its price from what it is right now. That's more than possible. But it's really so back to the point. When it comes down here, it's in oversold territory. It was an oversold territory down here, and we got a pretty good bounce back up again. So I'd be looking at some of the banking stocks first and foremost, mate. I think there are others as well, but I think if we think of cyclicality, if we all of a sudden start to get a return to some kind of normality, the cyclicality aspect brings us to financials. Financials are a hugely, they are very susceptible to the business cycle. Now, the business cycle has been broken to the downside, obviously, right now. So obviously, banks aren't going to be a decent trade. But if the business cycle starts to flip again, or when I should say the business cycle starts to flip again, then something like HSBC would be fantastic value when you consider that it's down here now, and from the highs of the whole run, it was up near 600. So it's lost. What are we looking at? Probably around about 30 to 40% of its value right now. So there's potentially 30 to 40% back to the upside. And if we look at it this on a weekly chart, then from the very, very highest point, then it's almost getting close to halved. It's almost halved its value from the highest point. So if we get a business cycle back in play, I'd say HSBC and some of the banks would be near the top of my list.
Yeah, historically, you can't argue that point. Against that point. Sorry, you can certainly argue that point. My question goes to, I suppose, and this is, I don't know if it's doomsday or what I'm trying to say here, but are we coming back to the same financial situation? How much money can the central banks, can the government, can fiscal policy, not so much the banks, but the fiscal policy, how much money can they actually distribute before everything goes, well, hang on a minute, we've got no money. We've got nothing backing the money that we've just spent. There's nothing underlying it, nothing underwriting it. Do we get to that point? And I guess if this went on for another 12 months, we do get to that point. Or how long does it take before we get to the point where, hang on a minute, money doesn't mean anything anymore? Because
I again, mate, I think you make a really good point. And at the end of that, does that not lead us to gold? If we're
indeed.
If we're looking at that and possibly cryptos. I mean, I'm still not 100% convinced about the crypto story. But does that not drive us to some of those safe haven areas that always come back, and gold is always the kind of where the smart money seems to go. If you can't go to dollars because the dollar is just a crap effectively, then you have to go to something tangible, and gold surely fits that bill. So this is one of the reasons I was interested in a gold stock. But I think that we probably, it looks like we're going to have some volatility on the way, and we're going to have some swings back to the downside in some of these. So this, which is going to provide opportunity. But yeah, I mean, and if that's the case, then the banks are done for in some respects, especially if we do go to cryptos.
Yeah, that's my point. And I can't see it, frankly. But strange. Well, I was about to say stranger things have happened, but maybe stranger things haven't happened. I don't know. I don't think we're going to be the same landscape on the other side of this, no matter how long it goes. I think things have changed. We've had a quantum shift of some kind.
It's a very odd time, mate, and actually it's making for a difficult market. And I would say that if you can get on with a direction, then you want to stick with that direction as long as possible.
Yeah, agreed.
And not, you know, effectively we really do want to take less trades, as little trades as we can during this period, and just ride it out, you know, ride it out while trying to make money, but not trying to dip in and out every day, because now we seem to be hitting the phase where we're getting conflicting reports, you know, conflicting reports about
Yeah, there are
vaccinations.
ebbs and flows all over the place right now, and
Yeah,
as I said
there really
before,
is. You know, which
very
which is
difficult
which
to
is
find a.
it's going to make it hard, isn't it, to actually get
It
a
is. Yeah.
to get a trend. But back to your point about the Aussie's really interesting. You know, we were looking at the Aussie, and Jeff and I were talking off air about the fact that now we're seeing the Aussie come down. All of a sudden, the Aussie starts to look like we should be selling it. But Jeff and I are of the opinion that all this is really going to do is create a buying opportunity, because actually, if China does get back to work before everybody else, then the Australian dollar is going to be one of the beneficiaries of that. Now, I'm not saying that you should trade it against the US dollar, but certainly looking at the Aussie dollar, I would have thought against the euro would be a good play. Maybe even
Yeah.
against the CAD.
And I've got it against the Kiwi at the moment. I'm not in, but I am waiting for that.
Yeah, yeah. I mean,
Reason?
yeah, but I don't understand the Kiwi, mate. So you will have to explain the reason for that.
Look, I think for on the balance of more commodities available in Australia than there are in New Zealand. So I think there'll be more demand for the Aussie dollar than there will be for the Kiwi dollar. The Kiwi will
Right.
follow the Aussie. I've got no doubt about that. But I think on balance, the Aussie will be stronger than the Kiwi as this recovery takes place, for
And,
the very reason that there's more commodities available in Australia than there are in New Zealand.
and let's just expand on that a little bit. If we're thinking about currencies and why currencies move, then it's a supply and demand situation. So, you know, everybody really kind of like, you know, simple kind of economics 101, if you like. If you need to buy a product from a country, what you have to do before you buy that product is to exchange your currency into their currency, and then buy the product. So what Jeff and I are basically saying is, if the Aussie has product that is more attractive to the rest of the world, i.e., China, really, you know, if China starts to grow
It's all
again,
about
then
China.
yeah, then it will use Australia for its commodities.
But
So
also,
if people,
there's a part B to that, because
yeah,
we've had so much destruction with bushfires and floods. You know, only 3-4 months ago,
yeah,
the insurance money that will pay for the destruction won't be held in Australian dollars. That insurance money will be underwritten offshore, without doubt, you know, by Zurich or anyone. Name a big company, name a big insurance underwriter. They won't be holding those payments currently in Australian dollars. They'll be holding those payments in US dollars, almost certainly, or
yeah,
in gold, or in something else. You know, it won't be Aussie dollars. You can absolutely bet your bottom dollar on that. But what will happen as these insurance claims are processed and the money starts to roll back to the people who need it, they will become Aussie dollars. So if they're held in gold at the moment, gold will have to be sold and converted to Aussie dollars. So all of that combined leads, and I'm not talking trillions of dollars here, of course, but I'm talking billions of dollars. So that is going to make a difference, in my humble opinion. So that combined with the fact that I think Aussie's got far more commodities that will be in demand as the regrowth occurs. That's why I think Aussie can outpace the Kiwi,
yeah, yeah.
and a
I
few
can.
other currencies thrown in. But the
Well,
dollar
this
is a
is the
big
thing.
question mark.
Yeah, the dollar is a big question mark, because it's at the minute it's the world's reserve currency, which kind of gives it a slightly different feel. You know, in some respects, everybody needs to be aware of what's going on with the dollar, but sometimes you wonder whether it's the best cross to trade against. You know, if you're kind of bullish on the Aussie, then I don't know whether you can ever really, you know, it's the Aussie dollar is a great gauge of your you know your sentiment indicator for how strong you think the Aussie is. But if you compare Aussie dollar chart to, as I say, I quite like the potential for the euro to be something that you could trade the Aussie
Yep,
against.
no argument. Yep.
You trade that against this. You have a look at the Aussie dollar and the euro dollar. They're both in weak territory right now, and I'd want to see really looking at visually, the Aussie doesn't look quite as bad. Difficult to completely make the judgment, but it looks at this particular stage, this is a dollar story, isn't it? Because we look at this and we go, Aussie dollar is coming down and it's looking fairly similar pattern wise to the euro dollar. And then, in fact, let me give this on a clean chart again, because I think it does get a bit messy with all this stuff. You look at that, and that's there's a head and shoulders pattern here on euro dollar. We look at the Aussie dollar, looks like a potentially maybe a left shoulder here, head, maybe the right shoulder's this area here, but that certainly still looks like distribution. So dollar is strengthening there. This is the Kiwi, which again looks pretty similar. Maybe a
It's
little
the same story. Yeah, no doubt.
And the pound dollar actually doesn't look too bad. The pound dollar, pounds looks like it's holding up okay. That one hasn't actually broken down yet. So the pound looks like the strongest out of the currencies
moment, yep.
at this stage. This is the dollar yen, which looks like the yen is the stronger currency of all of them right now, as we get into this kind of risk off appetite that the market is currently in. But the point is at this stage, it's certainly looking more like a dollar story than anything else. And until we clear out that particular aspect, to a degree, it's always a dollar story. But until we kind of get through that, then I wouldn't be trading anything against the dollar. I'd want to kind of look at some partners instead. This is the Euro Aussie, which is again at this stage it's moving higher. But if we believe the Aussie is a decent trade, then I wouldn't mind looking in these areas to see whether we do actually get some weakness in the Euro Aussie and try and sell this one off instead. I don't particularly like the euro right now.
Interesting. The euro, it's kind of no man's land. It's between the devil and the deep blue sea. It hasn't really come off the highs of my descending channel. It has come off, but it hasn't really done so to a large degree, and it's kind of not sure it wants to. So, and again, that's a dollar story. Really, I think the market is totally confused by the dollar at the moment, where it's going. We've come off long-term dollar index strength, but we're now at a key support level. So it's a little bit tricky. I mean, I really want to steer clear of the dollar, trading against the dollar at the moment for that reason. I think it's very questionable as to which way it's about to go. I'm sure there's lots of comments or questions in the
oh, sorry, mate. Yeah, you're after the
I can't see them.
Here we go. Yeah, we do have comments and questions. One here from Crystal, just saying if the dollar is weak, which countries would benefit and which currency would strengthen? And it really all comes down to why it's weak. But the dollar is actually fairly strong today. There seems to be an appetite to go out and buy some of those dollars, and it seems like from that headline that Jeff was talking about with people able to buy US assets without the dollars, which is such a strange policy. But we do live in those kind of times right now.
Interesting times indeed. Yeah. Well, central banks and governments are thinking outside the box, I suppose, because they have to. Because where else do they go?
Yeah. Yeah, absolutely right. I mean, we are waiting for some confirmation of what's going to go on in the US economy. It just, and as I say, it is constantly changing. One day we're going to get this. There's going to be 200,000 people that are going to die from this. The next day we get vaccination is coming through, and there's just no point in looking at that. It's just noise. All that stuff is just noise, which is why I'm saying if you can get on board with something longer term and just ride it out, then you're going to be in much better shape, because the more we trade, the more we're trading the noise. little worried about confirmation bias. Yeah, absolutely, Helen. And I guess that's another aspect of it, is that if you can get on board. Let's say that we get the Euro Aussie in this area, and you can get on board, and it starts to come down. Then you literally just can turn the news off, trade the technicals, and when it starts to flip around again, then you get back in. But until that particular time, you're almost better off just waiting for a decent price point on a longer term time frame, and trying to get on board. But there's no doubt about it. This is a trader's market, and what I mean by that is traders trade the hourly charts, if you like, and 4 hourly and below, and the investors trade the 4 hourly and above. Maybe not even the 4 hourly, but they're trading the longer term time frame. So where an investor can buy and hold, or sell and hold, if you like. I suppose as an investor, you buy and hold. Then an ad, as your market goes in a specific direction. The traders will just be taking advantage of the small movements that we are happening, and that are happening, and the fluctuations. But it is notoriously difficult. It's a difficult skill, trying to trade on short-term time frames, and particularly in the current environment, it's even more tricky.
Going to say, at the best of times it's tricky, but at the moment it's almost deadly.
Yeah, it is almost deadly, which I think is maybe a better approach is to try and use a combination of the two. So you are effectively trading, but you're also kind of holding. You're trading and holding, but rather than being in and out within a day, maybe try and be in and out within a couple of weeks. When it comes down to longer term investments, you really longer term trading investments, if you like, you are really looking to hold between 1 and 3 months and beyond, if it gives you the opportunity, but usually between 1 and 3 months. But where we're at right now, we're really looking at 1 and 3 weeks, for trading. And I would encourage you to try and, enter a market and try and stay in it for a week or two, because it will just take the pressure off your mind, so you're not having to make a whole bunch of decisions about it. And if you get stopped out, you get stopped out. No big deal. You weren't right on that one. Then you go back and try and find another one. You don't want to hold on to anything which is going in the wrong direction. That's for sure.
Bit tricky on small accounts, though, I guess, because of the swaps. They can eat you up on the small account.
Yeah, they can. But then I suppose if your trade is going in the right direction, then the
you
swaps
should be okay. Yes, true.
Which is another reason you don't want to hold on to any of the dogs, and be convinced that it's going to turn around. I mean, I have to be honest.
I hope it can. It's a bad place to be.
My account this month is positive, but I have given back quite a lot where I've had to accept quite a few trades which just stop me out. And it's just that kind of environment. I'm trying to find the gold trade that I had has made up for a lot of all the losses and some. And I think that's my point, is that one trade can actually make up for the whole month. And that's just the way it is right now. To try and expect to be right is unlikely. So you just really, if you get a really good one, which you you just need to be right on one of them. So with this kind of environment, I would accept that you're going to be wrong a lot, and the way you accept that is putting your stops in place and just seeing it, go. It's not easy emotionally to keep losing, but the point with accepting the losers is that at one point you're going to catch a winner. The difficulty is always with trading. If you've lost, and you're just about to catch a winner, the temptation is to take the money off because you've won some money, rather than letting that one run. And that's where it becomes difficult. Hey, Lewis, that's where the whole thing becomes difficult. But
and you take your foot off the pedal. You cut your risk in half, and your reward therefore gets cut in half. It's a very tricky thing once you've racked up a few losers.
Yeah, it really is. It's not easy for you psychologically, and I suppose the reason that I'm mentioning in it is that this stuff just happens to everyone. I've, as I say, I've racked up a few losers this month, and it's just about making sure that the winner or two really do account for more than the losers. And there's some people doing really well, some people actually, blasting out. Is it possible for HSB fail? Yes, anything is possible. Anything is possible. It is unlikely, but anything is possible. But the other thing is that the world has changed really off the back of this. I mean, it's changed fundamentally. It's like we are going through a war. The way
and we're only halfway through it, or let's hope we're halfway through it.
Yeah, let's hope we are. Yeah, absolutely. Hey JC, how you doing, buddy?
G'day, mate.
Yeah, we are already halfway through, but it is these are unprecedented times, which means that we cannot say with any kind of certainty that something will survive.
We've got no way of knowing.
No way of knowing. Yeah, I mean, it's we certainly hope that that the likes of the HSBC continue to flourish, and I'd be pretty shocked if they didn't, well, not flourish, but get bailed out and survive. But look at the airlines. The airlines that have been in all sorts of trouble still haven't had any help from the government. And if we think about what happened last time in this country, Royal Bank of Scotland was one of the banks that did get bailed out. Maybe the others didn't need it, I don't know, but there was some money kind of put aside for certain industries to get bailed out. But
you must have misheard or not heard Donald's comments overnight. Did you see his press conference today?
No, I didn't. No, what was he saying this time?
Well, among other things that were totally ludicrous, one of them was cheap oil prices. It's going to help the airlines. Man. How's it going to help the airlines? They can't fly, you idiot.
I know. I mean, if there was somebody that was more credible that was against him, I think Donald Trump's would be done. But I have to say, I'm not convinced he's going to be. I think he might well be in for the next 4 years.
Well, I thought that before this, but now I'm not so sure. I mean, the emperor's clothes are starting to disappear, I think.
But do you know his approval ratings are higher than ever?
Is that right?
Yeah. Yeah.
Look, Helen, I think it's the best show on earth and has been since.
Yeah. Yeah.
Absolutely.
It really is. Yeah, it really is. It is the circus in town, but I don't know. It's just. I mean, do you know? I have to say these are unprecedented and strange times. However, they really started 4 years ago when Donald Trump came to power. That was when the whole thing just started to unravel. In some respects, we shouldn't be surprised that we're getting what we're getting right now. I'm sure that there would be some soothsayers and prophets that probably told us this was going to happen. But yeah, it's just strange, and Donald Trump has been amazing for trading. It's no doubt about it, because we were starting to get a little bit flat with movement, but he
fixed that up.
He did fix it up. But this particular environment is it's not ideal, but this is where we find ourselves. But yeah, it's just peculiar to have, I guess, somebody that dumb. Mind you, in saying that, you know what? I don't think George Bush Jr. was particularly sharp. He didn't know half the countries on the planet, did he? I mean, you remember he was interviewed about.
They haven't had a sharp one. Oh, look, Obama looked sharp. He was Mr. Smooth. There's no doubt about that.
Yeah.
I don't think they're meant to be, because
no,
you can't have somebody that's too smart there because he'll not listen to his advice. Well, there you go. Donald Trump doesn't listen to anybody.
No, he doesn't. No, they've almost shot themselves in the foot. It's like, right, Ronald Reagan, he's thick enough. Get him in. Yep, okay. Right, we'll have George Bush Jr.
Put your hand up his back and he'll say whatever you want.
Yep, yeah. He's thick enough. Yep, get him in. Okay. Donald Trump, he's pretty thick. Yes, get him in. Hold on a minute. He's not doing what we tell him to do.
Incorrect.
They're going to get it wrong eventually. Yeah. So yeah, maybe
nailed it this time.
But you know, and it's become difficult because this whole thing has become a political football, and this is another reason why it is just a whole bunch of noise. When if you can get in a trade and you can stick with it, then you are much better off just staying with it. And you know, maybe even if you can add to it, then you know, even though that's pretty tricky, I have to say, but if you can add to those positions, then you could be doing okay. Which I will try and do with the FTSE if it continues to go in the direction it's going. I
Yeah,
will continue
look,
to add to it.
I've got to say I'm going okay. Quite happy with the positions that I'm in, and unfortunately for this show, they're all on the minors. But we're going to fix that, guys. And I might as well talk about that now. We're coming to the top of the hour, and I haven't been around the grounds. The reason I haven't been around the grounds is I can't see a setup at the moment. But as of next Monday, we will be going live, and I'm not sure on what platform yet because we haven't quite sorted that out. We'll be going live in the US session. We'll be trading US Open, and we'll be having a very similar show to this, but expanding on quite a few things. In particular, I won't be concentrating on the majors. I'll be concentrating on things that I think are tradable rather than just the majors, which I do in this show. And Ash is bringing a few extra tricks to the table as well. That will be starting next Monday, as I say. Details around that are still a little bit not perfect. So watch this space, I suppose. Hopefully tomorrow, before we go to the weekend, we should be able to let you know exactly how that's going to work and how you can get into that. That will be US session as well as this one. We'll still be doing this one, and we're still doing this one for free forever. Well, hang on, forever is a long time. For the foreseeable future, we'll be still doing this one for free. And the US session, I think there will be maybe once a month we might be giving you a free look into that one, but that will be a subscription thing. Very, very reasonably priced though. The comedic business is doing, yeah, I'm sure it is online. More, gee whiz, there's some funny things on Facebook at the moment, I've got to say. They do speak the truth. Should I go around the grounds, do you think, Ash?
Yeah, go around the grounds, mate. Go around the grounds. Just very quickly as well, there's an app over here called House Party, which is effectively you and your buddies can all get together and have a party, have a house party while you're all indoors. And I've been looking for who makes it, and there's a company called Epic that make it. I've just thrown you the screen, mate. Epic Games that make it. So I was looking at things like that, and I think to a degree we might be a little bit late on some of that stuff. Zoom would have been a great.
I was going to say, how far do we get into this? I don't know. If this goes for another 6 months, then probably there's still time. But I don't know. I can't answer the question. That's why I don't follow those sorts of things, because by the time I've discovered it, it's all over. It's done, sorted.
Yeah.
Anyway, let's talk currencies for a bit. Look, I'm not terribly excited, guys, by too many things at the moment, but there are a few things that I am looking at. And one is really not the euro versus the dollar. Euro versus a couple of others, yes, but not versus the dollar. But I will give you my impressions of what's going on here. And as this is what I was saying before, when Ash was talking about the bearish outlook on the euro, and I said, look, I'm just not that sure at the moment. And the reason I'm not that sure is because, yes, we've come back into the range. Yes, we've bounced off the bottom. Yes, we've gone to the top. But we've got this big obstacle in the middle of this range now, and it's called the monthly pivot. It's also got the weekly pivot with it. Monthly pivot's gone up to here, I note, and that's all good. But that creates a sandwich effect with the weekly pivot and the monthly pivot. So I think we're going to consolidate inside here for a little bit now, in particular because of what's happened in the US overnight. With that, I'll call it a liquidity thing, because I've got no idea how that's going to work, nor how it's going to affect the US dollar, and therefore the euro versus the US dollar. So I'm pretty much against trading the majors at the moment, is what I'm saying, and which is a terrible thing for this show, because guess what? That's what we trade in the show. But I'll give you my impression anyway. If all things were equal, and if all things were equal here, I would not be looking to trade short right now. The reason is we've had a double rejection of the monthly pivot. Why would I think that's now going to break? And I don't have a reasonable answer for that question. So until I do have a reasonable answer for that question, I've got to think, same as I always think, I'll play long off support. We're at support, and I'll play short off resistance. We've got to get to resistance before I can trade short. I would say this, if we do manage to get to this level, and I'll try and give you a little illustration of that, if I can find my pen. Come on. There you go. Don't know what color it is. If we were to get up to here, not take out this high is crucial. If we don't take out that high and we do come back underneath the broken trend line and retest it, in particular in this area, you can see a nice confluence here, support, resistance, monthly pivot. There's also a horizontal level going through there. Excellent place to trade from, in my opinion. So I'll be watching that area very, very closely. Take what I said about the US dollar on board as well. But if I see something that really interests me there in terms of, okay, we're going this way or we're going that way, then I'll definitely trade it. It will be at very small risk, however, because of the uncertainty surrounding the US dollar. So I hope that makes sense. Not willing to go short right now because we are at a support level, but I would be if we broke resistance and didn't take out that high. That's crucial. Okay, so that's the euro. Dollar yen, I can really see some chasm underneath dollar yen, and that kind of excites me as well. And I said I don't want to trade against the US dollar, but gee whiz, if it does set up, I would. If you have a look at what chart were we on before? Daily, maybe? Yeah, the daily. Maybe even the monthly. Yeah. It's not really depicting what I want to show you guys, which is a bit weird because it was obvious to me earlier. There it is, 4-hour chart. Okay, so what we've got here, I spoke about this yesterday. Remember I drew a line down the middle and said, if we were to see on this side,
yeah, sorry, Crystal,
on that side, then we're at least down to here. And that's my play at the moment, if I can find it. You can see exactly what's happened on the lead up to here. So high, low, consolidation at the top, 3 little Indians. You remember I spoke about those. And down we've come to the first former resistance level, now support, come back off it to the resistance level, now resistance. And in my humble opinion, we'll go through here and down to this level before something else happens. That's if symmetry plays any part. And I'm a massive fan of symmetry. And that's looking quite likely at the moment. So I'm seeing 105.13 in the first instance, and maybe even 100-ish. Let's call it 101 in extension. So I'm thinking that's a distinct option for us. Dollar yen short if you can find a way in. I can't see one at the moment, to be fair. We are at resistance, however. So if we break through the resistance, got above the daily pivot, then found our way back underneath it, may be tempting, but I hate trading short at these levels. It's not a great place for me to trade short. Maybe there's a better option if we can find that trend line, break, find the resistance level, back underneath, retest, bang, short from there. That's a far better option for me. Cable, we're not in the trade as yet for the breakout, that's for sure. What we have done, however, is a beautifully technical, this really, if you look at it, because we've got a beautiful descending channel here that's been broken, retested a couple of times, didn't go long. That's telling me something. If we're not going to bounce off here and go long, something else is happening, in my humble opinion. So what am I looking for? Well, I'm looking at the double top, and I'm thinking significant lower high here somewhere would get me really interested. The lower high could also be interesting if it came back under here and retested the top of the descending channel. Probably got that, you know, don't take that as an exact line. It may even be there at the moment. I'll get rid of it and put a trend line in. And it may be a little bit clearer. So that may already have happened. That's a little bit more interesting than it was before. What have we got? Candles closing at the moment at 8 o'clock my time, I think. So we've got an hour left in this candle. If this candle were to close as is, or better still, got back above the daily pivot, which is this level here. If you don't have the daily pivot, it's at 123.76, which is pretty much the high of this bar. If we got a close in that vicinity of the current 4-hour bar, I would place a short underneath here. And I know I said I wouldn't trade against the US dollar at the moment, but that's a pretty key thing. I'm seeing the double top, seeing the potential for this to be a false break. And we could sneak underneath the monthly pivot here with our entry, pretty much where our entry is for the breakout. So I'm not displeased with where the breakout entry is for the short at the moment. I would like to see this candle close, however, and if it does close bullish and decisive, at least on this trend line, then I'd be happy to trade it short. So keep your eye on that one. I didn't want to do that. Go away. It's going to happen again as well. So I can't change that at the moment. All right, so you've got that pretty clear in your minds, I should imagine, as to what I'm looking at there. Lewis, excellent question. And the answer to that is we're going to start. I haven't monitored it, mate. That's the honest answer. I haven't monitored it. And we're going to show in the US session exactly how to journal that. Not only that, but everything else.
Yeah, we'd quite like to give you guys some extra value in the US session, and I think journaling might be one of those things that that we can add. And I think if we can, if we can show you guys how to journal and then how to analyze your journals, then that would be a huge value. So we're going to put something together with that. We're going to be tight on tight on time, Jeff. There's a lot to fit into that hour.
There are lots to fit in. We're trying to work out how much time we've got on the other side of that as well. I haven't got an answer on that question yet, but if we need to stay, we'll stay. It's as simple as that. What do we got? We got the Aussie. Now, Ash and I have spoken about the Aussie. This is not dissimilar to what I've just described on the pound against the US dollar. There's one key difference here that I like in terms of the word I'm looking for is chart pattern. That's not the word I'm looking for. Analysis, something like that. My analysis anyway. And it is the bottom of this rectangle. So the range is a little bit more defined than I can see on the pound US dollar. Plus, I've got a bias long on the Aussie, as we've discussed pretty much ad nauseum, I would have thought. So all I'm waiting for really on the Aussie is either one of these two things: weekly pivot test and some form of confluence that I can trade the bounce off there. In fact, I've considered placing a limit order, buy limit down here. It's not my style, so I've talked myself out of that. But I am keen to find a way in. So if we got back above here now, in particular, if we took out the pivots, the monthly and the daily pivot, and got back up into the channel, that would be my sign to go single, to go long. It doesn't look as good from a technical perspective as I feel about it, I've got to say. But gee, that weekly pivot does look very, very enticing. I think even if I got a signal that this is going to go there, I may even be tempted to trade that. I haven't got that at the moment on any chart, but maybe later in the day. I don't know. I don't know where I'd find it, frankly. Maybe off this resistance area here. So if we got up to here, failed to get above the monthly pivot. So if we broke here, then came back underneath, then I'd be tempted. So if I don't see that clear break of the monthly pivot, that may well be an option. But gee whiz, I'm asking price to do a lot, to be fair. Dollar CAD, again, going back to what I said before, this was setting up beautifully for a long off the false break of this support trade line and off the pivots. But then we've got this ridiculous candle. Why do they do that to me? The very last thing I needed for a setup and to trade long here was this bar, and it's got big tails on it. So that precluded me from actually entering the market. Otherwise, I would have, if we had just the body, we'd be okay. We could trade along here, but it's not the case. Yes. Yes, what? Well, here's my yes now. My yes now is really what we've done is come off the top of this descending channel, and I'm seeking a lower high. So this trade line now has got to go, not because that's not what I want to see, but because it's now been broken a couple of times, 3 and 4 times. It's no longer reliable, in my humble opinion. So I'll rely on the top of the channel if we got back there, or maybe a break and retest of support, maybe. But yeah, I'm keen for this to go short. It depends a whole lot on oil, of course. And there's another question that we've raised all this week. Why would anybody want to buy oil at the moment? Okay, it's at a very cheap price, but you know, the market's flooded with oil. The demand for oil is down like you wouldn't believe. The demand for oil has got to be so low compared to a normal day in the life, if you like, of the world. It's tough to see. So for that reason, I can't get any reason to trade this in either direction. It doesn't make sense to me. I want to see, pardon me, a weak dollar, but I can't see a strong CAD. So yeah, it's tough, guys, and that's what I'm really struggling with the dollar at the moment, as you can tell. The structure here on US dollar Swissy is something that I've been calling for days, if not weeks. But what I wanted to see was a lower high, sorry, a higher low off the base of this big rectangle once we'd been to the bottom. Hasn't really come, except for maybe late, when was that? Monday? Maybe that higher low is now in place, but can I trade it? No, it's not there for me to trade. So frustration again. Kiwi. Now the Kiwi today has come off quite a bit down to support in the monthly, the weekly pivot. Reason appears to be that the RBNZ have done another QE. So they've bought up more bonds, etc., trying to ease the pain of what the whole world, not just Kiwis, are going through. So pretty much quantitative easing, Mark. I don't know what you would like to call it, but that's not the only reason, I wouldn't think, but that is one of the reasons why we're seeing the Kiwi come off today. Is that support, however? And yeah, interesting. Really interesting. Coming off the bottom, this might be the higher low I'm looking for on dollar CAD, eh? Interesting. I'll keep my eye on that on the 4-hour chart. Don't mind it that much. How could we trade this? Okay, we could trade it like this. We could see the weekly pivot break, price get underneath here, consolidate, back above it, retest it, and there's your signal to go long, taking profit at these highs. And then maybe you've got a trade on your hands. Maybe you have. But again, that US dollar story is very, very, very difficult. So if there are opportunities as I've described them come up, yes, I will trade them, but it will be at very low risk because I'm not trusting what the dollar is all about at the moment. It's as simple as that. Are there disadvantages to trading miners? Only that they're probably less reliable in some degrees. The most reliable currency pair in my opinion, is the euro dollar. Why? Because it's the most traded currency, and therefore the liquidity levels are generally there. But with the miners, not so much the case, because there is, by definition, less people trading them. So what you're really after is liquidity at all times. And if it's not there, it just makes trading a little bit more difficult. So if there is a disadvantage, that's one. The other is the spreads are a little bit tight, a little bit wider, and therefore your 30-minute and below charts are just a little bit difficult to trade, because when you take quick profit, then your spreads are cutting into that fairly dramatically.
Isn't the the caveat to that though, Jeff, that because they carry more volatility, actually they do actually also create more opportunities
and can be more profitable on the exchanges.
Yeah,
per pip. That's very true. If you get on the wrong side of one, the spreads can be pretty rugged as well. The swaps can be pretty rugged as well if you're on the wrong side. So yeah, if you perceive those to be disadvantages, Crystal, then those would be they, in my opinion. But Ash is absolutely spot on. They can provide what he's talking about as well.
Yeah, and really, we as traders, volatility is a huge friend of ours. So the miners are a great place.
Well, we can't do nothing while the market's doing nothing.
Exactly, and that's some of the problem that you find with the euro dollar at times, is that there's just a lack of movement, because there's almost too much money in there. It's great for trading levels, but actually to catch some really nice sharp moves, it makes it a little bit trickier, I would suspect. So as Jeff said, there's going to be advantages and disadvantages to both, but I think the miners actually, for traders, holds probably a more attractive proposition.
Yeah, look, I've always relied on the liquidity story, and since I went to the miners it's probably only 5 years ago that I started trading miners, because I used to only trade one currency pair, euro dollar. That's it, full stop, nothing more. That's on a small time frame. I've always traded euro yen, pound yen, euro dollar on 4-hour charts, but the rest of the majors as well. I didn't even trade those. But 5 years ago, I made the decision that I was being terribly boring in webinars, because everyone was getting sick of me talking about the euro dollar, I suppose. So I decided to trade the majors. The miners rather, and look, we've had a fair bit of fun on those, I've got to say. So I'm not complaining about it, and they're definitely tradable, but it does take a little bit of tweaking of my strategy to be able to do that. And by that I mean, you guys really haven't seen me trade the 30-minute charts, because there's been no setups. But once I get into a 30-minute trade, I take profit very, very quickly. And on the miners, that initial surge, if you like, which takes me into the market, which is the liquidity kicking in, right? Once that happens, the miners tend to go a little bit further than does the euro versus the dollar, for instance. And if the miners are coming back at you, they'll do exactly the same in reverse. They'll go back a little bit further than will euro dollar. So that's a little bit tricky, and took me a fair while to adjust to that on the smaller time frames. But bigger time frames, no drama. It's no difference. Don't have a problem.
We might need to wrap up, mate. We might need to get into a meeting, which is to do with the US session show.
Just for a change.
Just for a change, yeah. So we're going to push off, just so we can push forward with this the new structure next week. We'll be back same trade time, same trade channel tomorrow anyway, and we'll discuss some more on this. We should have a little bit more time tomorrow. We might not be in such a rush, but as we try and get everything in place, then we have got a few meetings to attend to. So are you okay to wrap here, mate?
Yes, mate. Done. So,
okay.
Guys, thank you very much for your company as usual. Thank you for the questions that we were a little bit late getting to, but that was simply because there's just a weird thing going on that I can't get into YouTube, which is kind of crazy. Thanks, Kumar.
Yeah, you're welcome, buddy.
and we'll try and sort that out as well. And we may be on a different meeting platform with the US session. Hopefully, if we get this meeting done today, we will be able to tell you all about that in detail tomorrow. In the meantime, thanks for your company, and bye-bye for now.